Now, let me introduce our special guest of this blog. On the other end of the line is Antony Cahill, Visa Managing Director for the European region. Hi, Antony. Can you hear us? Are you with us? How are you?
Hi, Adam. Yes, I can hear you, and it's great to be with you today.
Wonderful, wonderful. Great to have you here with us, Antony. And today we'll talk about a little bit about the future of the banking sector and how you view it as one of, let's say, the market makers, really, because Visa is one of the companies that facilitates the market and its operations. So you are at the heart of the transformation of the financial sector in which it's becoming more digital. Recently, I've read a very interesting report of Visa about open banking. So open banking is a recent trend that, as I look from Poland, is more popular in Western European countries than in Poland. But first of all, could you explain to the Polish viewer what is open banking, what is the whole idea, and why are banking becoming more open, and is it safe?
Yeah, certainly, Adam. So open banking really is the result of a couple of things that have taken place, I guess, over the last 5 years or so. One has been there have been changes in the regulatory environment. So we've seen some changes in the regulatory environment in terms of how customer data can be accessed and used by trusted third parties. So it allows consumers to give permission for third parties to access and use their own personal financial data. And that can be both for reporting purposes, but it can also, under PSD2, it can actually allow third parties to initiate transactions. Now, how that takes place from a technical perspective is really around the use of what we call APIs. But effectively, at its simplest, that's a technical approach, technical architecture that allows these third parties to be able to access the data that's held on consumers by by institutions such as their banks, etc.
Okay, so why are banks engaging in it? Because data in the modern world is a capital, is something that's one of the most valuable assets that you have. So why are banks opening up? What is it in them?
Well, I always think about this in two ways, Adam. One has been there has been a regulatory requirement for this to happen. So, if you wanted to look at it from one perspective, the fact is that banks have been required to make their data available externally through an API framework. But I think from the other side, the fact is, many banks are now looking at this, and I think initially some banks would have thought, to your point, gee, this is our data. This is an asset. We don't want to make this available. Should we do this? And I think that's quite understandable. And I was a banker for 22 years before joining Visa, and so I went through this journey myself. And when the open banking environment first started to come about, I was in Australia at the time, and we thought about this very deeply. But the fact is, I think many banks now are starting to both recognise and understand that actually there's an opportunity here to take data in, to actually ingest data, and to they themselves to think about how can we use this data to both promote different products and services to our existing customers by accessing the data that they have potentially with other third parties, and or to actually go out and acquire new customers. So I think what started very much, certainly from a traditional bank's perspective, where, let's face it, that's where most of the data was, you've sort of gone from this defensive mindset now to increasingly seeing banks and financial services players saying, actually, there's a real opportunity here for us to use this data, and for us ourselves to be able to mesh that to the data we already have and approach our customers with better products and services, be that credit scoring, be that, hey, Anthony, I've noticed you're using services somewhere else with a third-party provider. We've also got a product or service. Would you like to try that? So I think it is very much now you're sort of seeing that defensive mindset to begin with, but that is shifting.
And okay, if you explain it to me right now, and a lot of Poles are listening, and they're wondering, okay, is it safe? We are now into times of GDPR rules, but this is my private data, one of the most private data. It's my financial data. So Is it safe and how is it protected? So should the Poles be afraid of opening up their data and, for example, a company from China at this moment can read their personal information? What have they bought yesterday?
Well, I think a couple of things to remember here, Adam. One is the consumer has to give their consent. So the consumer obviously, is interacting with essentially a third party or whoever the entity is that's seeking to use their data, and they're being asked to give their consent. So I think, for a consumer, they always have to think about, is this a brand that I trust or no? Is this a company that I know or trust? So that's the first part from that consumer perspective. Secondly, there is a regulatory framework in place. We have GDPR. We have that regulatory framework that's there to ensure consumers are protected. And thirdly, the fact is the banks themselves are always sort of working to ensure that the third parties that are seeking to access their data are in fact authorised at doing it in the correct manner. For me, I think you've hit on a really important point here, though, in relation to open banking, which is all participants in the payment system. It is imperative that consumers feel that their data is being treated appropriately, it's being handled in the right manner, that it's safe, it's secure, and it's resilient. So, it's incredibly important that that is maintained. And I think, if that was lost, then that's a real challenge for everybody. So that, for me, is one of the most important questions that does have to be asked. And obviously, regulators have an important role to play here to ensure the right frameworks are in place and that, we don't have bad actors, we don't have nefarious actors sort of within the payment system. Or even companies with good intent, they have to ensure they've got the right processes, procedures in place. One of the things that we've seen with the pandemic, Adam, is globally, when we often get asked about what's happened with fraud in the last 12 months. And from Visa's perspective, we've seen the use of contactless increase around the world. That's happened significantly. The use of electronification of payments has really picked up. Fraud levels have stayed the same, or in actual fact dropped in relation to the use of card. But what we have seen in relation to e-commerce, for example, is lots of different cyber attempts and different bad actors that are trying to access data, etc. So it is really important in open banking that those security principles are adhered to.
You mentioned a very important point, and you mentioned a very important actor in the whole field, which I think is even more important than a couple of years ago, the regulators. Nowadays, regulators are kind of market makers. So they decide, in fact, who can enter and on what rules can enter the market. And do you see a risk that the banking sector will, with the help of regulators, protect themselves so that open banking will be just a PR framework, but in fact they will hesitate to give freely their data to third-party financial institutions. So do you see that risk, that banks will use regulators to protect themselves in the competition with, for example, financial technological companies?
I think that's it's a great question, actually, Adam, and it's one that's very topical.
Okay, so what do you think?
I think regulators, they have a really important role to play here. And so when you think about large traditional commercial banks, and let's take Poland as an example. One of the things actually that really impressed me when I joined Visa Europe was actually how innovative the Polish banks are as a whole. So when I look at Polish banks compared to many other banks around Europe, highly innovative. They've got pretty modern technology stacks. Their mobile applications, for example, are first class. So they've actually got a really good customer offer. They're large entities. They've got significant balance sheets. They've got the trust of their customers. They've got existing relationships. So they have many strengths. One of the things that banks have said around the world is, look, with open banking and with the rise of fintech, hey, we have to have a level playing field here because we have to ensure that those new entrants are required to follow certain standards, that they do need to behave in a certain manner. Otherwise, that becomes an uneven playing field for us. And in actual fact, we're potentially going to be providing the infrastructure for others to use, and we don't get to make appropriate returns. So I think there's very much two sides to this particular argument, and regulators have to find that sweet spot where they certainly create conditions where new entrants can come in, because I think it's good to have challenges. Competition is good. It makes everybody lift their game. And certainly in a number of markets in Europe and around the world, we've seen the rise of new competitors into the marketplace has seen existing players lift their game, lift their standards, improve their offers. So I think competition is good, but at the same time, it doesn't need to be a level playing field. So let them come in, but you also have to ensure that traditional players feel that actually, look, yes, bring competition in, but don't make it unfair for us. So I think this is part of the rough and tumble of business as well. Traditional banks will be thinking, how do they compete? How do they continue to grow? And regulators, I think, by and large, will find their way through this in terms of looking for that correct balance. Because ultimately, this has to be of a benefit for consumers and the whole ecosystem. And as we go back to that earlier point, one of the things that regulators do have to ensure at the end of the day is the integrity, the security, the resilience and the trust in the payment system, because that's required for everybody on an ongoing basis.
You mentioned that Polish banks are innovative. I agree with you.
Yeah.
We've started the innovations. We have some fintech incubators that are financed by the largest Polish banks. That is, of course, great, but that can be also a risk to open banking, as banks have put a large amount of money into creating their own fintechs, their own innovative solutions. So they won't be that eager to open up to newcomers. For example, there's a new company from the Silicon Valley entering Poland, and they say, okay, now give us your data. We are great, we are approved by the European Commission, European Securities Authority, and so on. So give us your data, and we have better product than you have developed in the last 5 years. Do you see a risk that the banks will want to, build only on their own fintechs, and they will be some kind of excluding the newcomers from other sectors, from other countries? How do you assess that?
Not necessarily, Adam. I think the banks will seek to play to their strength as they should. But if new entrants come into the marketplace, and from my perspective, what is the solution that they're bringing to the marketplace? What's the pain point they're solving? How are they differentiating? How are they seeking to give consumers a better experience? If they can demonstrate that and they can deliver that, then I think the Polish banks will sort of look at that, they will evaluate that, and if it makes, if there's a clear opportunity for them to work with a fintech, for example, then they'll probably adopt that and take that to market. Now, if the fintech is looking to compete directly against banks, then I think that will be, we'll see different use cases emerge. Sometimes a fintech will look to compete directly against an existing player. Sometimes a fintech will look to collaborate with an existing player. Then that's where regulators, will come in, and that's where, at times the regulatory environment will say you are required to make the consumer's data available through APIs, assuming the consumer has given the appropriate consent. So, for me, the regulator is there to set that environment up, and then let's have competition, and that's one of the things that at Visa we've been very clear on as a network. We encourage competition. We greatly value the relationships we have with all of our existing clients in Poland, but we also view competition as a good thing, because the payment system needs to keep evolving. We need to keep ensuring we move together, we move forward together, and we improve existing products and services. Because one of the interesting things is, Adam, is cash in Europe as a whole is still nearly half of all consumer transactions, and so there is this enormous opportunity still for the payments ecosystem to continue to grow, to continue to evolve. And there's actually room for everybody, as long as we're actually delivering a better customer experience.
Okay, so as long as the pie gets bigger and bigger, everyone will be happy to share it. Am I right?
Well, I think, look, it is one of the things about the industry, in that there is still enormous opportunity for everybody to continue growing. Of course, there'll be competition, and I think again, that's a good thing, but it is an industry where there is still enormous amounts of cash, and the digitalization of payments is continuing apace. And again, if you look at what's happened in the last 12 months with COVID, if anything, that acceleration has sort of gone further. So we've seen the digitalisation increase, and I don't expect that to actually change, to be honest with you.
Okay, so I have even more difficult question. Is banking, open banking, possible without banks? Let's look into the future and let's imagine that the big tech companies, like for example Apple or Microsoft or Amazon, they have plenty on data on consumers. They have, I think, even data on how they make their financial decisions. So maybe financial technological companies will decide to, merge with those big techs and compete with banks, and they say, okay, if you do not want to give us the data and you are protecting it through regulation, we have our own data, we have the access to this data. Maybe it's not data pure, but it's enough to have it. Can you imagine such kind of a future, open banking without banks?
So I think if you go back, your question of is open banking possible without banks, then technically, in terms of what open banking is, then yes. I think your question is probably more of, can I imagine a future without banks? Personally, and again, as a career banker, my view is I think banks still have an enormously important role to play. I think they're integral to the economy. They have been for many hundreds of years, and I think banks are adapting. They will change. They are adapting to the environment. And banking isn't just technology. I mean, technology is an important component of that. Credit management, banking is about having a license to operate. Banking is around risk management, etc. So there are many elements to banking that go beyond just technology. So my personal view, Adam, is open banking as a capability. Yes, you could do it without banks today, but will people choose to conduct their financial lives going forward without banks? Personally, I don't think so.
You said that banks will adapt. How do you think this adaptation will go on? So in which ways bank will adapt? Because I think that the keystone of a banking system is the personal relationship between the bank, between its employees and the customers. Right now in the era of fintechs, the relation is based between you and your mobile phone. So how can banks that are based on this fundamental human-to-human relationships, how can they adapt and how can they compete with this changing of the whole financial system?
Yeah, look, I think there's many elements to this. I'm like you. I believe banking is still very much a personal element to that. Now, of course, you can have that personal element coming through in terms of personalization, using a consumer's data to get to know them better. So that is one element. But I still think today, for many people, if you're taking out a mortgage, for example, or a business is securing a loan, that's quite an emotional thing to do for an individual, and quite often they still want to sit down and have a conversation with a banker, with somebody they can trust, who can give them advice. Now, that doesn't necessarily have to be face to face. Now, that could be over a video monitor, for example. So, I think things will change there. Many banks are thinking about, what does my physical network need to look like in the future? Today, many branches are still used for cash handling and for other activities that are quite intensive, but you may say, is that really value adding in terms of my customer relationship? So you'll probably see lots of branches move to being more of an advice-based environment where individuals can go to seek out advice and for that real value-add conversation. Those branches may increasingly become equipped with video facilities, for example, so you can have that video conversation with a customer if they're sitting at home. So I think that's one significant element. A second one is, banks are very much now increasingly thinking about, how do I, though, design my products and services for a digital age? Because notwithstanding that personal element is very important. The fact is, and again, I can say this from personal experience, so I wouldn't pretend to know precisely how the Polish products and services are delivered, but I can talk from personal experience. Many of our products historically were not always designed, thinking about the natural data flow for a customer in terms of how do you fill in the application form, for example. Many of those forms were designed for a paper-based form environment. When you're thinking around digitizing the process and having it on a mobile screen and the ability to reach out to trusted data sources, be that for tax file numbers, or for KYC, when you can reach out to central database or repositories, or smart forms where you can actually start to pre-populate for consumers. Don't ask the customer to put the same information 2 or 3 times, which traditionally many of those paper-based products and processes may have required a customer to do that. So I think banks are working that part through. A third one is banks are very much thinking about, how do we become more agile in a digital world? How do we enable ourselves to change rapidly to external market conditions? So they're just 3 changes that I would name that I think banks will work through increasingly to ensure they not only remain relevant, but actually they continue to be highly successful as we move forwards.
You used the word agile. That's a great word to describe the future of the banking sector, because everything will need to be agile in such kind of dynamic environment. So can banks be agile, or need they just cut down their employment and become smaller to become agile, or can they be as big as they are now and be still agile? What do you think?
Look, I do think banks can be agile, and I went through this myself. It's challenging. It's challenging to take a very large commercial organisation, and the fact is, banks historically have been built around risk management, ensuring that, and conservative culture. I mean, that's traditionally where banking has come from, and I think moving to this new world now, where you have a culture of being agile, of being able to test and learn, being able to put things into the marketplace and test with clients, that's a new mindset, but it can be done. And again, I know a number of the Polish banks have had real success actually in driving agile through certain verticals in their business. So no, I do think banks can do it. It's a challenge, both not just from a process perspective, but from a culture and mindset perspective. But I have no doubt that banks can drive agile through their environments. Having said all of that, and I think banks will be they'll be very relevant, they'll be successful. I do think some fintechs will also manage to bring some really impressive products and services to the market, and they'll find a sweet spot where consumers really value working with them.
I drawn a lot upon your experience from down under as a banking advisor, banking expert, but I would like now to turn to your view about the future of the payment system. So what will be the role of payment providers like Visa in the future? Will there be some kind of facilitator of cooperation between various institutions in the financial sector, or there will be circumvented by microfinance solution, direct cooperation between different parts of the financial sector? What do you see the future of the payment system?
Well, I think one of the things I would say, Adam, as well, is Visa itself is changing. And that's one of the things that we've sort of had to work through. I've asked many people today about Visa, and I think certainly people outside of the industry say Visa, that's a card company. So so they actually think sometimes people think we're the actual card issuer, which of course isn't the case. But Visa itself has gone through and continues to go through significant change. So we talk now about network of networks. We want to ensure that we are there for our clients, and wherever they want to move value or receive value, they can do that across multiple networks. And the fact is, there is choice now, and so we're starting to see the rise of real-time payment systems. We've got local ACH. You do have the card-based systems in place. And so I think the actual payment networks, you'll continue to see more choice. In terms of what's the role of Visa, I think there's a couple of things. One is, not only do we want to be a network of network, we're increasingly working at them to bring additional products and services to become available for our clients. So be that security or authentication, for example, or loyalty services, where it arguably makes sense for Visa to be able to draw upon economies of scale and to deliver that to some of our clients, be they issuers or acquirers actually in the ecosystem, where we have both the scale and expertise to be able to deploy that on a global basis. So that's one of the things that we're seeking to do. So move beyond moving money back and forth in a safe and secure manner, but also saying how can we wrap additional products and services around that for our clients. Secondly, we very much view ourselves as being a company that can actually create a platform to bring fintech, for example, together with our traditional clients. And we increasingly now see real interest from many of our clients saying, hey, Visa, I know you deal a lot with fintechs. What are some of the capabilities that are out there? Because one of the ways that a traditional client can become more agile is by working more closely with fintech. Fintechs can be part of that solution to becoming more agile, or fintechs can bring new capabilities to the fore that a traditional player can say, I can use that, I can leverage that, that can create real value for my customers. And a third area where we're really investing heavily, Adam, is on our Visa consulting and analytics service. So we now have expert teams around the world, and we work very closely with our clients to help them think about, how do I become more agile, or how do I think about this market entry strategy? How should I redesign my products? How do I ensure that I can deliver the best possible payment authentication rates when things like SCA comes online? So we're really seeking to move beyond the role we've been traditionally seen as playing, to being able to play a far broader role and bring more value into the ecosystem.
Could you give us an example of such kind of a project or cooperation between a fintech, you and conservative clients from the old world, let's say, of banking?
Well, we have, we have a capability called Visa Marketplace, Adam. So Visa Marketplace effectively is where we've worked closely with a number of fintechs across Europe and across the world, actually. And we've got to know them really well, understand their capabilities, what they can do, are they scalable, get to know the management team, and to have a real strong level of confidence that actually they bring something valuable and they bring something differentiated to the ecosystem. And one of the things that we do, Adam, typically we'll work closely with those players, and we can help, we'll help them commercially. Sometimes we'll take equity, minority equity in some of these players. But we've built out the Visa Marketplace, and when we talk to our traditional clients, we will present Visa Marketplace to our traditional clients to say, here's a whole series of fintechs that we're working with. This is the proposition that they have. Is it of interest to you? So is this, in terms of the offer or the capability they have, is that a familiar problem to you? Do you see value in that for your clients? So one of the companies that we're working with, who I've been really impressed with, is a company called Minna Technologies. So Minna Technologies is based in the Nordics, and what they specialize in is subscription management, Adam. So if you think today, I don't know how many subscriptions you have personally. I know I have many, and in actual fact, every time I seem to look, my family have taken out yet another one, whether that's for a streaming service, for video content, or music, but lots and lots of subscriptions. And quite often people get quite confused about, well, how many have I got, and how much am I paying for that, and if I want to turn that on or off, how do I do that? And what Minna does is they wrap that up in a really nice UX layer. They build that in. So it's a white label offering that they'll build into an issuer's mobile capability, for example, which puts the power of subscription management back in the hands of the individual consumer, but it's delivered through the traditional bank's mobile application. So the traditional bank still very much owns that customer relationship. Now, that's just one example, Adam, but there are many companies that sit within Marketplace now who we believe can bring something of real value add to the traditional payments landscape today.
Okay, so you're reducing the information asymmetry between fintechs and conservative players, and you are showing how to use modern solutions so to help to enhance the business on both sides. So you're looking just for synergies. That really sounds great. We ask here in this panel each person a question about the future, and taking all these things together, what you have said, what is your assessment? What will be the future of the financial sector in, let's say, 10, 20 years? How banks will look like and how our everyday finance activities will look like? What is your assessment? You can, use your imagination freely.
Wow, that is a broad question, and I'm sure you have some fascinating answers from the panelists. But a couple of things. One is, I think we will continue to see the availability of information becoming greater. So consumers will absolutely be own their own data. So they'll be empowered in terms of understanding their own data. It's their data, choosing how that data is made available. And some people say that the actual value of that data will pass to the consumer. So consumers might be able to start monetizing that data themselves. But I do think absolutely, if you think about GDPR, if you think about the idea that the consumer's data is their own, and that's certainly very much how the regulators think about that and talk about that, and we're continuing to see sort of that movement take place. I think that's one trend that will happen. The second one is I think that switching costs will continue to reduce. So consumers will be able to move their products and services more freely, whether that's through marketplaces or the ability to easily switch to one financial service provider to another. Those friction points will continue to be removed, which both of those points suggest competition will only serve to increase. I think a third element will be, I've heard the question of what is banking, and this is a really, and if you think about
really important. That's a good question.
Topics we've covered earlier. What will be required going forward? So banks today are very much, we think about the core capabilities they have, risk managers, being able to operate within a regulated environment, strong brands, the ability to have strong customer relationships, technology, etc. You could see a world where those various components could be sort of, thought about as Lego blocks. And so banks may say in the future, well, I actually don't necessarily want to have all of that technology myself. One of the things you are seeing is banks, for example, increasingly looking to cloud services. Now, again, regulators have played an important role here in ensuring that any movement to cloud services is in a safe, secure, resilient manner. I think that's incredibly important. But the cloud arguably offers some wonderful advantages for banks if they're seeking to use that. Now, initially it started off very much with public content that was being moved onto the cloud, but you're increasingly seeing banks now starting to think about, can I put some of my core customer data into a cloud environment? Now, again, if that's undertaken in the appropriate manner, I'm fully supportive of that because there are lots of advantages of that. But that's back when I started being a banker, and the view was always you needed to control your end-to-end value chain. You needed to be sort of owning and operating all of those assets yourself, because that was the right thing to do, because only then could you be absolutely certain about resilience and security, etc. Whereas I think today now we're seeing banks are being enabled, or not just banks actually, but financial service providers can start to think about, who do I want to use to actually procure and deliver some of that capability? So a bank might become an orchestrator of pulling various products and services together and then presenting that into a customer. So banks could look quite different in 10 years' time. I personally, though, still think, and I might be wrong, I think this relationship element that you touched on is still incredibly important. People value relationship. People value trust. And I think those two things will be enduring regardless of whatever changes take place.
When you made your first point about the consumers and the changing nature of consumers and the way in which they consume financial products, I wrote down a word that was mentioned a couple of decades ago, I think in the late 70s. It's prosumers, so the mixture of producers and consumers. As I recall, it was Alvin Toffler who invented this new word to show how consumption will evaluate how it will change in the future. Do you think that that kind of prosumers we'll see in the future? Is that what you want to say? Or this will be a totally new kind of using financial services?
I mean, if you think about why do people take a mortgage? People take a mortgage because they want to own. So I think there's still these underlying needs for financial services and products. The way they're delivered is changing, but for me, the underlying requirement for these products and services is not changing. In terms of payments, I need to transfer value to you, for example, if I've acquired a product or service from you. So I think the underlying need for financial services hasn't necessarily changed. The way they're being delivered has. And for me, digitization is a natural progression of the evolution of commerce and money. I think it's been very beneficial overall. I think consumers today are sort of better served than they ever have been by the financial services industry, which is a good thing. It's more competitive than it ever has been. And I think it is more innovative in that you've got lots of new players coming in and seeking to sort of get the consumer's attention or a business's attention to say, hey, I can remove that friction point or deliver to that need better than the other competitor in the marketplace. So, I think you'll sort of see the way it's being delivered changing, but ultimately those core needs will remain the same. Has that answered your question? I'm not quite sure if I hit the answer there to the question you were asking.
It was a kind of a tricky question because I wanted you to refer to the whole concept of prosumers, so that consumers will have influence, larger influence than now on the financial services. So, but I think you answered that they will have to some extent. So their role will be more important than it was before.
Well, I think inevitably, because to a degree, the more competitive the market, the more influence the consumer has. Because if they have choice and they can exercise choice, then by definition, suppliers or players in the industry will have to ensure they're meeting the consumer's needs. So if you look at it from that perspective, then I do think consumers will have more influence, and they'll be able to exercise choice more easily than they ever have done.
Okay. Thank you, Antony. Thank you for having you here with us. It was a great pleasure to talk and to use your both banking and payment provider experience and have a kind of even futurological view on the future. So thank you for the discussion.
It's my pleasure, Adam. And look, thanks so much for having me. I trust the conference goes well, and good luck, and I'm sure you'll have a good conversation over the next day or two.
Thank you a lot. So, take care. Bye.
Thank you.